So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha. Hey everyone, Kirk here again at Option Alpha, and welcome back to the Daily Call. Today we're going to be talking about trading options near expiration. Now, I have to warn you, as I probably will in the future for a lot of these calls, that my kids are sleeping right now, so this is done literally in the middle of the day. And if you hear random screams or movement, that's just her in the background waking up, because she could wake up at any time, and it's like a time bomb going off when they do. Those of you who are parents, you know that. But so trading options near expiration, I think there's a couple things that we want to just touch on with trading options near expiration. One, we know that as we get closer to options expiration, which is usually the third Friday in the month, for monthly expirations, weekly expirations expire every week, that as you get closer to expiration, your risk of assignment, especially if you're in the money, goes way up, right? So really it's kind of that first couple days, like actually expiration week, your risk of assignment goes up. So the Monday, Tuesday of expiration week, if options expire on Friday. But then really as you even get further into expiration week itself, Thursday and Friday, then obviously the assignment risk goes dramatically higher, like parabolic, right? Now we don't have exact numbers from the OIC or the OCC, but we know that that risk is much, much, much higher, right? What I always suggest you do is you obviously adjust, manage, hedge, do whatever you want to do the month of expiration that you're working in. So if you're working in September, then you make sure you make your adjustments in September. Give your stocks and options enough time to actually move as you're heading towards expiration. But once you get into that expiration month, then you want to start thinking about it, start analyzing adjustments. When you get into expiration week and actually trading options near that expiration date, you want to be more diligent in closing out positions that are profitable, first off. So take money off the table that's, take winners off, right? Doesn't have to be a full winner if it didn't hit a profit target, but it's still profitable. If you're in expiration week, take that thing off. And then second, closing out positions at first that are deep in the money. So anything that's really not profitable, right? So if you sold a call spread and the market moved way up, it's probably not a high likelihood that the stock moves way down in 2 days. Get that position off, buy it back, close it out so you remove the assignment risk. Then what you're left with is any positions that are kind of like in the middle, right? So they're kind of dancing around break even, small profit, small winner, etc. And you want to take those positions day by day. Because at that point, if your options are in the money, but just in the money by $1 or a couple cents, there's probably not too much risk that you're going to get assigned because it could go either way. But as soon as it starts going deep in the money, again, you want to close the position. What I always suggest is, take those positions that are kind of neutral, meaning that they're not making a lot of money, not losing a lot of money, they're still yet undecided, if you will, and take them day by day. If the market moves favorable one day, okay, take it one more day. But as soon as it moves against you, you just want to take that position off, right? Because we want to remove that assignment risk. Now, the last thing, of course, that we'll talk about is, of course, you can get assigned during this period. That doesn't mean that because most assignment risk is on Friday, that you couldn't get assigned early on Monday. We've always done podcasts and have video training on, how to manage that, but that process is totally manageable. It's not going to kill you. Even if you have a small account, you can definitely deal with it. You just want to close out of any stock that you are assigned, either long or short. That's the real key of it, is if you don't want it, you don't want to hold it, don't have the capital to hold it, just go ahead and reverse the trade. Brokers let you do this even if you don't have the capital to do it, because they know they want to reverse the trade and kind of close out that stock that same day. So hopefully that helps out. As always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.